Hi, everyone. I'm Diane Brady. I'm here with Michael del Castillo, of course, senior editor covering cryptocurrencies, all things on the blockchain, and more.
Yes.
We're talking about Bitcoin NFTs. I thought we already had Bitcoin NFTs. So what am I wrong there?
It's a fabulous question. I think that sometimes you like to joke that you not knowing is sort of what makes your questions smart. In fact, you nailed it again. Well, I think many people believe that Bitcoin NFTs are new. In fact, they're not.
Okay,
there
good.
was a
good for me.
You nailed it. You nailed it. There was a sort of primordial time in like the first 3 to 5 years of Bitcoin where people were still talking about the possibility that there might only ever be one blockchain. Mm-hmm. That Bitcoin was open source. Any developments that happened on any other blockchains could easily be implemented on Bitcoin. There was no reason for a second or a third blockchain because Bitcoin could become whatever the world wanted it to be. Needless to say that beautiful naivete did not play out the way that the world thought it would, or the way those early developers thought it would. But during this time, we had a lot of experimentation. We had early projects like Multicoin and Counterparty that existed so that you could color Bitcoins to mean different things. Mm-hmm. There were even some projects that tried to turn these colored Bitcoins into currencies for cities. That project didn't go very far, but it was a cool idea. Mm-hmm. And Counterparty specifically let you create NFTs on the Bitcoin blockchain. It was really innovative. I don't think the world was really ready to kind of like understand that level of application on blockchain.
So it was a market problem, like the Counterparty, for example. Did they just get distracted and move on to greener pastures, or was it that there just wasn't an appetite?
It's funny. I actually think that it's a really interesting divergent moment where history could have gone one of two ways, because there was demand. Some of these early Bitcoin NFTs were selling for $10,000, $20,000, $30,000, $40,000, mm-hmm. which by today's standards of $1 million NFTs and $60 million NFTs seems small, but this was 10 years ago almost.
Bitcoin could get you a burger back then,
right? Yeah. And so the fact that there were these NFTs, they were called rare pepes, by the way, if anyone wants to go Google that. These rare pepes had some real market value. The Bitcoin maximalists kind of like overwhelmed that interest.
Is that another word for purist? What's
the purists,
Bitcoin maximalist?
Yes,
okay.
The Bitcoin maximalists or the Bitcoin purists, they really won the day there.
So a currency and only a currency. Is that what a Bitcoin maximalist?
Largely, okay. Yeah. And I think that just Bitcoin too. Like it's not a matter of what is Bitcoin, but what is Bitcoin relative to all the other stuff. The maxis kind of do not allow for a competing world of cryptocurrencies, and they are very, very slow to make changes to Bitcoin's core.
Here we are right now. So we're talking about Bitcoin NFTs have reemerged in this new form.
Yes.
What does this new form look like? What's the protocol and what's the news on that?
So we came a long way from those early days. First of all, we had CryptoKitties on the Ethereum blockchain, but there was no cap on those NFTs. Sorry, which means that without the limit number, the prices stayed pretty low. Mm-hmm. It was a game, but it was a game that drove Ethereum block settlement times higher and higher and higher. It was getting more and more expensive, and the success of CryptoKitties in a lot of ways was its own demise. Mm-hmm. The creators of the CryptoKitties spun off a company called Dapper Labs, which I think we'll probably talk about later.
This is the one that's under SEC scrutiny. Oh, it was the. I guess it's the. Was it the court for the Southern Court? New York, whatever.
New York's paying attention. New York's
paying
attention to Dapper Labs now. A little teaser down the road. But they made a lot of success. They improved the technology even further, got movable NFTs, which was something that we didn't have in the early days. And
unpack this first.
Yes.
I want to know what is the technological challenge of Bitcoin NFTs? Because if it was so easy, people would have done it
Great
multiple
question.
companies?
So since those early days when there was kind of like really raw experimentation, Bitcoin's use exploded. And that explosive use meant that it was getting more and more expensive to settle a transaction on a Bitcoin block. The first change that allowed Bitcoin NFTs to exist was called SegWit. SegWit basically allowed for each block of Bitcoin transactions to be larger than it had before, which allowed for the possibility that at some point there could be extra transactional data in those blocks. But that actual ability didn't happen until a technological improvement called Taproot. Taproot was the change to the Bitcoin blockchain that allowed for more nuanced, data-heavy transactions to be closed within a Bitcoin block transaction. Once you got the bigger Bitcoin blocks and you allowed for more nuanced, sophisticated data to be in those blocks, you finally had the foundation laid for Bitcoin NFTs 2.0. These more elaborate, more sophisticated NFTs. But that was really just the beginning. It was software changes. It was up to other people to come up with the ways to use those changes that allowed for these so-called non-fungible tokens to really kind of come back in full swing on the Bitcoin blockchain. And what finally really got that going was a project called Ordinals. Ordinals had its own technological breakthrough that really brought NFTs on the Bitcoin blockchain to the forefront.
This is a protocol, right?
It is. But it was different than some of the other Bitcoin NFT projects that had been circulating for a couple of years now, but not really gotten any steam.
And this just came out this year, basically? I mean, I've been hearing about it this year.
Late last year.
Late, okay.
And before Ordinals came around, we had a number of other Bitcoin NFT projects. Stacks was doing something. Even Lightning Labs, which is a Bitcoin layer 2 solution, had come up with the ability to create NFTs on the Bitcoin blockchain. But a lot of this technology was pointing to assets off the Bitcoin blockchain. This is very similar to the way that NFTs on Ethereum are created.
So am I arbitraging in some ways? If I'm creating an NFT and I'm making a decision as to whether, it's Ethereum based or Bitcoin based, for example, am I partly betting on which of those currencies is going to rise the most, or do I care?
Both. I do think that there are some people that want to see the price of their NFT go up with the currency itself, but there is far from a guarantee there. In fact, over the past year, we've seen the price of NFTs collectively drop something like 93%, while the blockchains on which those NFTs exist haven't dropped anywhere near that much. So there's not exact correlation between the cost of an NFT and the success of the blockchain on which it exists. But if you have a bigger blockchain, if you have a more popular blockchain, if you have a blockchain that everybody knows about and uses, the chances that your NFT is going to get more attention, therefore increasing the likelihood that it goes up in value, definitely does increase.
So talk about some of the issues that this creates right now. You mentioned Dapper Labs, which is in some ways a separate situation, but let's start with the Bitcoin NFTs. What is I don't want to say you're not a soothsayer here, but give me some sense about the level of excitement, the level of controversy around this.
Well, so the excitement is massive, as is the terror and fear.
Oh, okay. Which side are you on?
I'm firmly neutral on this one.
Okay.
I think it's a fascinating story either way. One of the things that I think is so fascinating about it is it wasn't just a more successful PR campaign that led to the explosive interest in Ordinals NFTs.
Right.
It was a technological breakthrough. So the Ordinals team was really fed up with this idea that an NFT was two separate things. One of them was a couple lines of code on the public blockchain that marks the ownership, but also that points to an off-chain repository for images, sound bites, etc. And so like the thing that you actually own with these older version of NFTs, i.e. the NFTs on Ethereum, most NFTs on Ethereum and elsewhere, is just a line of code. And
so you can change the NFT.
Yes, because
offline.
the image itself, because the soundbite itself, because the property deed, etc., whatever it is that you are pointing to is elsewhere, that thing can be changed. It could even be removed. It could go out of existence altogether, and you would have a really expensive line of code that pointed to nothing.
Right.
And what the Ordinals team did, and they are actually part of a recent movement of people that are solving the same problem, is figured out a way to store that data directly on the blockchain.
So it cannot be altered.
Correct.
Okay.
Correct. And what the Ordinals team did, they're calling it an artifact. It's an immovable record of an image, etc., that is stored on the publicly available auditable Bitcoin blockchain and nowhere else. The name Ordinals, incidentally, comes from the way that they solve this problem, but we won't get into that right now. Incidentally,
we
though,
could.
I couldn't.
Oh,
That's
okay.
the hard part.
Okay.
They're not the only people to solve this problem. In fact, a little company called Proof.XYZ, which incidentally is run by Kevin Rose, the creator of Dig, and backed by Alexis Ohanian, the co-founder of Reddit, has actually also solved this problem. Instead of calling it artifacts, the Proof team calls it in-chain NFTs.
But it's tantamount to the same thing.
Yes, it is. And these on-chain transactions is kind of what they're making fun of a little bit here. The idea that the ownership is of something that isn't actually in the blockchain. The Proof team is doing in-chain NFTs, which similarly means that these NFTs are actually created from the blockchain itself, in the blockchain. And that technological breakthrough, I think, has the possibility to open up the application of NFTs to a wide variety of other areas.
Are we already seeing proof that NFTs created this way have higher value because of that fact that they are essentially embedded?
You know, I think that we might be too early to see the value of Bitcoin NFTs reflecting an interest in the new technology. What I think we're seeing is the value of these Bitcoin NFTs reflecting the fact that they are the first of a new kind of NFT leveraging Bitcoin. So the interest is more from a historical perspective than it is from a technological perspective.
Well, let's talk about some of the issues being faced right now. Talk about Dapper Labs and what, this whole debate around securities.
Yeah, so it's interesting. I think some of the people that are terrified of NFTs being minted on the Bitcoin blockchain are bringing up concerns over security issues. In fact, Bitcoin stands to this day the most stable, certain regulatory positioned digital asset, and it is pretty clearly a commodity, at least within the United States. While some have called Ethereum a commodity, including one regulator at the SEC, who somewhat informally on stage said that Ethereum was a commodity. No one else really has that status. And one of the reasons for that is that Bitcoin existed before people were paying attention. Bitcoin distributed before it was considered an investment opportunity. Most of the early people that bought Bitcoin got it because they were cypherpunks, they were ideologues, they were
buying for pennies on the dollar. If you're
they were
Tim
technologically
Draper,
curious, buying pizza, experimenting with this stuff, which is to say that Bitcoin distributed organically. And a lot of people think that that means that it's the only truly decentralized cryptocurrency. Even Ethereum, which was relatively early to the game and was technically open to anybody that knew the pre-mine existed, really was only distributed in those early days to people in the know, people that got that email saying, hey, we're doing this thing, you want to buy some. And so this regulatory uncertainty about whether or not Ethereum might be a security, whether or not other assets might be a security, has contributed heavily to the perception that NFTs might be securities.
Which is less desirable than being a commodity?
Very much so for people that want to see them traded widely, because in the United States especially, you have to have regulatory permission to trade securities. And NFTs, regardless of the underlying blockchain, can be designed in a way that starts to make them look much more like securities than otherwise. So for example, let's say that you and your friends want to buy an NFT that's worth $1 million. But you're not millionaires. So you all get together and you all put a little bit of money to buy this NFT that you all can share. You communally own the rights to that NFT. Now that starts to look an awful lot like a security, and that has nothing to do with the underlying technology. That has to do with the behavior of the people on top of it.
And the recourse you have if things go wrong, which is the genesis of this class action suit.
Yeah.
Right?
So Dapper Labs raised tens of millions, hundreds of millions of dollars at a multiple billion-dollar valuation. Got some giant partners, including the National Basketball Association, which has basically given the rights to create what amounts to basketball trading cards using the Dapper Labs blockchain, which is called Flow. And the fact that Dapper Labs owns this blockchain, the fact that Dapper Labs created this blockchain, the ownership of the different nodes is of debate, we'll just put it that way.
What's the cryptocurrency underlying it?
That's a good question. There's really barely much of a cryptocurrency to talk about at all.
Oh, okay.
There is, but it's like that's not what people are using it for.
Okay.
Which is to say that Dapper Labs has a disproportionate control over the Flow blockchain than a lot of other blockchains. And that's created concern that assets that are created on the Flow blockchain are actually securities that represent more the value of Dapper Labs itself than the asset.
Is that not better for the buyers? I can see why if you are the creator and the seller, you're like, eh. But if I was actually wanting to buy one of these very expensive NBA NFTs, would I not want it to be classified as a security?
It would be much more difficult to sell that.
Okay.
So you may want to have your asset declared as a security because you think it's going to increase the value of the asset, but it would also heavily restrict who you could sell it to, which would honestly likely have a negative impact on the price. These trade largely very quick, relatively speaking, to traditional securities because many more people can buy them, and all of that goes away as soon as an asset is considered a security. But what I think is really interesting here is it's not just the technology itself underneath it that makes something look like a security or not look like a security. It's the behavior of the people using it. And so if, for example, an NFT on the Bitcoin blockchain, which is pretty firmly positioned as a commodity, were to create an NFT that was worth $1 million, and
multiple owners,
1,000 people decided they want to buy that NFT on the Bitcoin blockchain, and that NFT was then at some future time determined to be a security. What would that do to the commodity status of the Bitcoin blockchain itself? That's a huge question. It's a huge what if. And so
does the outcome of the Dapper Labs case, is that going to be one of the deciding factors here?
I think that the outcome of the Dapper Lab case will set a precedent that will be used to determine how all NFTs are decided. That's not to say that if Dapper Labs is determined to be selling securities, that all NFTs will be determined to be securities. But if Dapper Labs is determined to be selling securities, it will be a legal foundation on which other future decisions could make.
And it's early days yet. I mean, basically, the judge had just basically said, it's
early
plausible,
days on all of this.
Not going to dismiss it.
Yeah.
But I want to get one of the macro questions that I wouldn't say haunts Bitcoin, because maybe not that many people are haunted by it, but just the environmental cost.
Oh, yeah.
That's always been a big differentiator. How is that playing into this whole debate? And the growth of the industry.
The environmental impact of Ethereum was a huge downside not that long ago when it came to the NFT adoption rate. We were seeing headlines all over the world.
Of Ethereum or Bitcoin?
Of NFTs on Ethereum.
Oh, NFTs on Ethereum.
So
okay.
think of Ethereum as like the base layer.
Yep.
And there's a lot of different layer 2 solutions that let you create non-fungible tokens on Ethereum with some extra bells and whistles. And those NFTs are accounted for using the Ethereum ground level solution. And that ground level solution formerly cost a lot of money in the form of energy consumption because you had to run computers to audit that blockchain, which then proved the individuality of each of these NFTs.
But not as much as Bitcoin.
Actually, back then, it was less than Bitcoin, but it was still a lot. And people weren't talking about Bitcoin NFT burn because there weren't NFTs on Bitcoin. Well, Ethereum fixed its environmental problem by moving to what's called a proof of stake algorithm, the consensus mechanism by which users agree on the state of the blockchain, moved from using computer power to using people locking their assets into a wallet. And if they were proven to be honest, they would get more assets. If they were proven to be dishonest, they could run the risk of actually losing their currency.
And need to use energy basis.
Yeah, it's like you put your own pound of flesh in there, and instead of burning actual energy, you're risking your reputation. Now, Bitcoin maxis, as we have already defined them, have said that they will never do that. Bitcoin will always stay what's called proof of work, which is this computer power to audit. And so the movement of NFTs to the Bitcoin blockchain reintroduces this question about the environmental impact of NFTs. Ethereum had just solved this, somewhat controversially, not everybody thought it was a good idea. And now we're kind of seeing the beginning days of maybe that same problem being reintroduced to the Bitcoin blockchain. So in some very exciting opportunity for a lot of people. There's a whole new way to create value on the Bitcoin blockchain, but it has also introduced a bunch of questions about the future of the asset class.
Great. We'll have more to talk about. Thanks, Michael.
Thank you so much.